Now, looking at the market momentum's been pretty positive for the past few days. Where is the bourse going to from here?
Well, thank you to be on board. Again, my apologies for being slightly held up. The market in Nairobi on the roads is quite active, hence traffic. But I would say the bourse has shown some positive trends, albeit not that much, because you notice there's been one of the key companies, British American IPO, which listed yesterday, and the price had gone down to as low as 6 shillings, leveling out at 845, which is below the 9 shilling IPO price. But be that as it may, there have been slight indications of actually movement in the market. But as you all know, the Nairobi Stock Exchange has very, very heavy reliance on foreign investors who at the moment are a bit lightweight in the market owing to the various issues that are happening in the global economy. One, for instance, is the European economy, which is suffering a lot owing to the Greek crisis and what have you. So there's been that little from the domestic investors. But beyond that, you notice that the market has not moved as it had a couple of months back.
Now, on the results front, we had Uchumi Supermarkets out with results today. It posted a 19% growth in full-year profit to about 515 million shillings, but earnings fell to 1.47 million shillings. What did you make of those numbers?
Well, I would say we still have to notice that Uchumi has yet to level out to get back to its former glory as one of the top chain in terms of retail chains, supermarket in the country, because we have the likes of Nakumatt, there's a called Tuskys, which were the period when Uchumi was actually struggling with the whole bankruptcy, and they had actually been moved out of the bourse. There were a lot of other companies that took up the market share. But be that as it may, they've had very good management, leadership, and efficient systems put into place to ensure that they regain that market share. But as it is, the markets right now are not an opportune moment for companies to actually turn around, owing for one of the key things is that the cost of living has actually gone up. Inflation is in double digits in the country, which means purchasing power is eroded. A lot of consumer products tend to actually be expensive. A week ago, we talked about the price of a kilo of sugar actually going up to as high as 200 shillings, which means that the ordinary or average Kenyan will not buy as they were buying before they reduced their purchasing power. So that, in essence, also the cost of doing business is expensive. Electricity has gone up. So when you factor all that, it goes to the bottom line. You notice that a lot of companies will have their bottom line affected.
Now, talking about doing business and how it's increased, we saw the operating expenses up about 14.6% to 1.83 billion.
Yes. Well, that goes to show that it actually is becoming more and more expensive to run, because a lot of things have gone, not to use the term, but almost going south, because the cost of living is very expensive at the moment. And to generate, I noticed that Safaricom and the other companies actually made an intention to increase the calling rates, because they say the cost of running, which is operating expenses, has actually gone up. So we'll see this effect all around, especially with those key industries, the manufacturing industries and a few of the service industries, because their bottom line, they have to cushion to be able to generate and be profitable come in the not so near future.
You touched a bit on the company's market value. The retailer did say that in terms of regional expansion in Uganda, Tanzania and Kenya, it would help double their market share within 2 to 5 years. What are the growth prospects for this company going forward?
Well, I would say we're having in mind that already Uchumi has a foothold in Uganda and has been there for a couple of years. But what used to affect them had been their ability to penetrate, because they're yet to penetrate the Tanzania, they're yet to penetrate Rwanda. But when you notice way back, it was actually those expansion programs that almost brought the whole company down, brought the whole house of cards down, because they were expanding more than the rate at which they were growing. So this tended to have a negative effect on the overall cost of running the business. But with what I've said before, that management has really changed drastically. The current person, Mr. Siano, has actually put in place systems that are systematically growing Uchumi. And yes, I would say about a growth of about between 5 and 10%, but not more, because owing to the circumstances on the ground, they're not the only supermarket chain, and also value added. Today, the customer is more aware. They're moving more away from loyalty to what is value for money, and that is what will be their driving force. If they can offer value for money over and above and not be able to make profits, then we're looking at a substantial growth on their part.